Joining us to talk about Chicago's tech scene is the firm's latest addition. Paul Lee recently joined Lightbank from Playboy Enterprises, where he was managing director. Before that, he was at the Peacock Equity Fund, the venture arm of NBC Universal in New York. He joins us now from none other than Chicago. So, Paul, first of all, what is your strategy and how does it differ from other Valley-based venture capital firms?
Hi, Emily. Great question. So, I get that question a lot in terms of how are we different, and I would say the way we're different is we have a really interesting skill set. In Brad and Eric, who've been entrepreneurs and have founded 5 companies, you're obviously bringing a very different skill set to the table in terms of building businesses and executing. And then my background, I've been a venture capitalist 7 of the last 8 years, and I've had an operational background with Playboy. In terms of combining all those different skill sets and then working really closely with the portfolio companies that we invest in, I'd argue that's a pretty differentiated approach to the way we invest in companies.
So what has it been like working with the legendary Groupon co-founders? What have you learned from them and vice versa?
So I would say, since my transition from Playboy, I would sum it up as the view has gotten a little worse, but I'm learning a lot more. Look, the opportunity to sit 20 feet from guys like Eric and Brad, priceless in my mind. So when they made the call, it was kind of a no-brainer for me. So I've been aboard for about 6 months, and it's been awesome. Totally great experience. And I think from the perspective of meshing my background in venture capital with their experience on the entrepreneurial side, it's just been an unbelievable experience so far.
I want to bring in Cory Johnson, now our editor-at-large, who's spent years covering the venture capital business. Cory does want to weigh in on this conversation. Cory?
Paul, what are the 5 companies you mentioned that Eric and Brad have started?
So you have Starbelly, you have Inner Workings, you have Echo Global Logistics, you have Media Bank, and then now Groupon.
So, and maybe Brandon Apparel in there as well. If you look at, okay, so Starbelly was sold to a company called Halo, which within a year had written off the acquisition as a zero, and Halo went bankrupt. Brandon Apparel, a company that they took over and ran, also went out of business shortly thereafterwards. I wonder how you move away from that legacy to try to establish Groupon as a legacy as opposed to those failed businesses that they started.
Well, I think with any entrepreneurs, you face ups and downs, and I think from the perspective of looking at their background, they've taken 2 companies public, and they've just done a phenomenal job of weathering the storms in a lot of different situations.
So with those 2 companies they've taken public, Inner Workings and Echo Global Logistics are similar to Groupon in that they are both very capital intensive. In both cases, Lefkowski and Keywell, before there even was a Lightbank, sold more shares than either company has in retained earnings. Is the approach of your firm in future investments to find very capital-intensive, body-intensive businesses, atypical of Silicon Valley, where you try to find a widget that can sort of replicate itself without putting a lot of people at the problem?
Well, I think in terms of our investment philosophy, I will tell you what we have in common with other firms. A couple things. One, I think in terms of management teams, I think we look for fantastic management teams. So that's kind of the underpinning of everything we look at. Secondly, we look for large market spaces, whether capital intensive or not. And to the extent that we can back management teams and help them in large market spaces that are interesting to us, that I think is a fundamental underpinning of our investment philosophy.
Do you guys already look at Groupon as a success? I mean, that's the first Lightbank investment, right?
Yeah, I think in terms of Groupon, for obvious reasons, we're not going to comment at this point, but I think you've read all the articles, so probably not a lot left to be said on there.
So, Paul, other than e-commerce, what particular trends or areas are you guys most interested in?
So I think a couple areas. One, offline to online. And what we mean by that is, we've obviously had a lot of experience working with small businesses now. And I think to the extent that we're understanding a lot of these businesses are trying to come online and trying to understand the metrics and how to understand the execution steps of doing that, we're looking at companies that help companies do that. So one of our investments, a company called Sprout Social, basically allows small businesses to monitor their social media presence so that if anyone is tweeting or writing a Facebook update, either negatively or positively about a business, the business will be alerted in real time, and they can either join the conversation or comment or refute or add to the glowing praise. The other sector that we think is really interesting that's kind of related to commerce is the notion of curated commerce. And in that sector, we just backed a company called Beachmint out of Southern California. And really what they're doing is they're taking elements of the Guthy-Ranker model. I don't know if you guys are familiar with that space, but it's things like proactive and it's celebrity endorsements to really push quality products to the end consumer. So we just completed that investment. And then the third thing, which I think meshes well with my background, is the notion of content consumption. And we just backed a company out of New York City called OnSwipe, which basically allows you to create a website that's specifically formatted for the tablet device in terms of functionality, in terms of consumption, in terms of the elegant, beautiful nature, in a really quick 5-minute process.
All right. Paul, thanks so much for joining us. Lightbank has said it's committed to investing $100 million over the next 10 years. We'll be watching to see where you put that money. Thanks again.
Great.